Hello everyone, myself Smt.Meshram, Mahatma Gandhi Vidya Mandir Sanchalit, MHG Junior College, Malegaon Camp. Once again, welcome to all of you in class 12 of Commerce. So, today's subject is a very special SP, means Secretarial Practice, and this subject is Lawful Subject. Today we will see the second chapter, and that's your second chapter, Sources of Corporate Finance. What content are included in this chapter? Sources of own capital, shares, return earning, sources of borrowed capital, debentures, acceptance of deposits, bonds, ADR and GDR, commercial banks, financial institution and trade credit. So, introduction to sources of corporate finance. I think you know very well what is the corporate finance. Corporate finance means acquisition of fund plus use of fund equal corporate finance. That's clear. So now, finance as like blood of business. Just like that, a business economic involved a transaction based on finance. So finance is the life blood of business. Economic their transaction involve buying and selling, receipt and payment of money. There may be a credit transaction, but it involves payment of money at a future date. Hence, finance is the basis for business activity. Overall, transactions depend on a finance budget. There are two types of activities in business. These activities is selling and buying. Most important factor in business organization. Key to the business activities. Finance is the center that of business operation because a business activity cannot be completed without finance. Hence, a finance holds the key to all business activities. So you can manage also money management. It is related to money and money management, the inflow and outflow of funds. So a business organization collect a fund, a third, a different types of capital sources. The various sources of a finance available to business may be explained with the following chart. Let's see. Sources of finance budget means based on type of capital. Sources of finance based on type of capital are so divided to capital, own capital and borrowed capital. So own capital is divided to a par shares, return earning. Shares also divided equity shares and preference shares. There are two types of shares is a very important. So next one, borrowed capital involved debentures, public deposits, bonds, ADR and GDR, banks, financial institution and trade credit. The above sources of finance may be external or internal. External and internal sources. So, first one, external sources. When capital is raised from outsider, for example, issue of share, issue of debentures, public deposits, loan from institutions, bank credit, etc. Now next, internal sources. When capital is made available for we think the organization. For example, there are two sources. It's a very important sources, external and internal. Now, next point, sources of own capital. What is the owned capital? Yeah, ownership capital. Now, it is that capital which is contributed by shareholder. This capital is collected by issue of equity shares and preference shares. The shareholder are owners of the company. And now, next important point, shares. What is shares? You know what is share? So now, shares means a smallest unit of the capital of the company. Shares in the share capital of a company and included a stocks. This a little parts about capital. You know what? Who is the shareholder? A person who purchase share of a company is known as a shareholder or a member of that company. So now next, features of shares. 1. Shares is a shares in the shares capital of a company. It is smallest unit of share capital. This a small part. This a small portion of capital. 2. It show the ownership of a company. So shareholder is a part owner of a company. 3. Shareholder is given a share certificate which has a distinct number. 4. It is a movable property of the shareholder. 5. He has right to receive dividend, interest and profit. He can take also receive dividend, interest and profit about company. 6. Each share has value expressed in term of money, which may be a face value. What do you mean by face value? This value is mentioned in the capital clause of memorandum of association, which is written on the share certificate. B. Market value. What is market value? It is the value of share in the stock market. What is issue value? It is the value of share at which the shares are sold by the company. A company can issue important two types of shares, namely, first one, equity shares, and second, preference share. So let's see a different types of shares depending upon the risk, the right to control and income means dividend. Now, kind of share. Equity share is equity share equity share. What do you mean by equity shares? In equity shares involve voting or a different voting right. Preference share involve type of shares. There are 8 type of shares: cumulative preference shares, non-cumulative preference shares, participating preference shares, non-participating preference share, convertible preference share and non-convertible preference share, redeemable preference share, irredeemable preference shares. There are 8 types. Equity share means those shares which are not a preference share. So equity shares are known as ordinary shares. You call also ordinary shares. The amount of dividend payable to the equity shareholders is not fixed. So the equity shares capital is called the ownership capital or risk capital. The next features of equity share. Functioning dividend. Functioning dividend means the dividend paid on equity shares is changeable every year because company does not commit any fixed rate of dividend on equity shares. The amount is not fixed. 2. Right. Equity shareholders have a right to attend all type of shareholder meeting, voting right, right of bond share and right issue, etc. 3. Permanent capital. On capital is permanent capital because the capital can contribute by the equity shareholder is normally used by the company for long term. Means this capital is you can use for long term. 4. Co-ownership. Equity shareholder, a collective, are treated to be the owners of company because it is their capital with which the company is formed and operated. This co-ownership then distribute profit and loss or the partner. 5. Issue price. A company can issue shares at per equal at discount means discounts का less than कम होगा and at a premium more than face value. 6. Transferability. Equity shares of a public limited company can be transferability is important. So transferred easily in the stock exchange market. Which is the stock exchange? Yeah. How many type of stock exchange? Next point. Preference share. Preference shares means what is preference share? Preference share are not the ownership share and carry fixed rate of dividend. इसका मतलब ये है preference shares are those which carry preferential right over the equity shares in the matter of payment of dividend and return of capital. It means that a payment of dividend is first made to the preference shareholder and then to the equity shareholders at the time of the company closure of the company. The capital of preference shareholder is returned first and then the capital is returned to the equity shareholder. So preference shareholders do not have voting right unless the matter affect their interest. Changing right of preference shareholder. The preference shareholder are the co-owners but not the control of the company. Investor who want a safety and regarding of a fixed income means dividend by preference shares. So next one, future of preference share. Preference in dividend payment, priority in return of capital, fixed rate of dividend, do not attend all shareholder meeting, safe investment, face value, types, no bound, no bonus or right issue, voting rights, nature of capital, and market value. Overall, all point involved in future of preference shares. Let's one, preference share in a dividend payment. The preference shareholder will get a preference or priority in the payment of dividend. Company will pay dividend first to the preference shareholder and then to the equity shareholder. Next, priority in return of capital. Company has to return the capital to shareholders at the time of winning out. Here also the priority is given to the preference shareholder over equity shareholder. And next one, fixed rate of dividend. The amount of dividend payable to the preference shareholders also a fixed rate. This rate is decided at the time of issue of preference shares itself. Dividend is paid on of profit of the company. If the director decides there no dividend to paid in financial pursuit, the preference shareholders have no claim for dividend. Preference shareholder can't claim on his dividend. Next, do not attend all shareholder meeting. Preference shares are not invited for the shareholder meeting. They can only attend such a meeting where their interest in affected, so they cannot participate in the management of the company. Next one, safe investment. What do you mean by safe investment? So for the preference shares holders, shares are a steady income getting invest. That's income is a fixed investment, mean a safe investment. Much a risk is not involved in their shares, although much dividend is not obtained. Next one, face value. The face value of preference shares is rupees. For example, 120 face value is a value written on the share certificate. Market value may be different than the face value. So do you understand face value? Type. There are so different types of preference shares. Unlike in equity shares such as participating preference shares, cumulative preference shares, and redeemable preference shares. That's types of preference shares. Now next, no bonus or right issue. Neither bonus nor right issue facility is available to the preference shareholder. Next one, voting rights. Voting right means Preference shareholders do not have normally voting right. They can vote only on the matter which affect their interest or directing. They do not enjoy the voting right to control the affairs of the company. He can't interfere in company's affair. Next, nature of capital. Preference shares are not long term of permanent share capital. Means preference shares is also short term of share capital. Their shares are redeemed after a certain period. Irredeemable preference shares cannot be issued by companies under which is Act Companies Act 1988. So then next, market value, rate of dividend on preference shares is a fix, so it does not affect the market value of preference shares. For example, the market value of preference shares does not change. Let's say main point, kind of preference shares. So there are types of preference shares. There are 8 types. First, cumulative preference share. Next, non-cumulative preference share, convertible preference shares, non-convertible preference shares, participating preference shares, non-participating preference shares, and redeemable preference shares, and last one, irredeemable preference share. There are types of preference shares. So now that's the first, cumulative preference share. Cumulative preference shares are those on which one will get dividend of all the year. If a company fails to pay dividend in any year, that year's dividend will be paid in next year. In other words, the unpaid dividend of past year will be paid in future year in case of cumulative preference shares. Usually, all the preference shares are cumulative preference shares. Unpaid dividend is the areas for the company. And now next, non-cumulative preference share. In case of non-cumulative preference shares, the unpaid dividend of past year will not be accumulated. Once dividend is not paid on these shares in an year, such dividend will never be paid in the future year. Next one, convertible preference shares. You can convert other shares in preference shares. Convertible preference shares are those which can be converted into equity share after certain period. So स्पेसिफिकली टाइम के बाद आप क्या कर सकते हो कि अगर आपके पास इक्विटी शेयर हो तो वो इक्विटी शेयर ट्रांसफ़र कर सकते हो, कन्वर्ट कर सकते हो, यानी कि इक्विटी शेयर्स कन्वर्ट टू या कन्वर्ट इन प्रेफरेंस शेयर्स. दिस conversion right is given to the shareholder. If they do not wish to convert, then their capital is paid back. Now next, non-convertible preference share. Non-convertible preference shares will not be converted into equity shares. that means these share remain as a preference share forever. Next, participating preference share. These are such a shareholder who can participate with the dividend payable to equity shareholder. Then, preference shareholders will get their a fixed rate of dividend first. Means a preference shareholder authorized a first receive the fixed rate of dividend. Then, in addition to that, they get a extra dividend with equity shareholder, that is, such shareholder can participate in the prosperity of the company. Next, non participating preference shares. So, non participating preference shares means then shareholder will only get their fixed rate of dividend. They cannot participate in extra dividend with equity shares. He cannot participate in extra dividend. Next, redeemable preference shares. So, redeemable preference shares means redeemable preference shares are those which are redeemed amount paid back after particular periods along with their dividend. The period of redeemable preference shares, redemptions of such shares is determined at the time of issue of share itself. For example, 5 year redeemable preference shares will be redeemed after 5 years. And now, last one, irredeemable preference shares. So, irredeemable preference shares is very important. So, let's see. These are such shares which are not redeemable according to Section 80A of the Companies Act 1988. Company cannot issue irredeemable preference shares. Then, which is the Act? Company Act 1988 and Section 80A. Now, let's see, compare with equity shares and preference shares. So, distinguish between equity share and preference share. First point, meaning. Equity share means equity shares are ownership shares and carry flexible rate of dividend. So, preference share are not the ownership shares and carry fixed rate of dividend. Priority. Equity shares has a second priority in payment of dividend and return of capital. So then, preference shareholder has a first priority in a payment of dividend and a return of capital over equity holder. Voting rights. Equity shareholder have a normal voting rights in all the shareholder meeting, and Preference shares holder do not have a normal voting right. Kinds. Equity shares are classified into equity share with normal voting right and equity shares with different voting rights. So preference share, there are a different kind of preference shares like cumulative, non-cumulative, participating, non-participating, convertible, non-convertible, redeemable, irredeemable, preference shares, etc. So bonus issue, they get bonus shares is company issue it, and preference share they do not get bonus shares. Face value, equity share are generally of the lower face value, for example 10 rupees, 25 rupees, yeah, 100 rupees, and preference shares are generally of the higher face value such as 100 and more. Risk, equity share are called a risky share as risk involved in more, they are less risk as they have a preference over repayment of capital and payment of dividend. So next one, rate of dividend. Rate of dividend is not fixed and change every year as a profit of the company change, and preference share rate of dividend is fixed at the time of issue, for example 10 percentage, yeah, 10 percentage of shares. And next one, nature of capital, it is permanent capital, so equity share is also permanent capital. So you know what, also known as risk capital, and preference share it is safe capital with स्टेबल इनकम, यानी कि फिक्स इनकम है इसका. सो फिक्स कैपिटल, सेफ कैपिटल. लास्ट, नेचर ऑफ इन्वेस्टर. Investor who wish to take risk invest in equity share. So then preference share, investor who want a safe way of their investment invest in preference share. Okay, so today's section is finished. Stay home and safe home.